Good morning, everyone. You are watching a live daily market outlook for Tuesday, 29th of May 2012, prepared by Windsor Brokers. Still a negative tone from the Eurozone crisis keeps the pressure on the major currencies. However, the mild recovery seen on Euro from last Friday's low at 124.96 still remains in play, as yesterday's easing was contained just above 125, and the 125 zone now seems to be offering a solid support at the beginning of the week, with the hopes for a further recovery, although some negative news are still putting pressure on the single currency. The top releases are coming from Spain as debt costs increases as the crisis deepens, and this pressures the euro. The Spanish 10-year borrowing costs near the 7% danger level, and Bankia shares hit record low yesterday after the government struggling to sort out its finances proposed putting sovereign debts into the struggling lender. The Prime Minister pinned the blame for the rising borrowing costs on the concern about the future of the euro, and again ruled out seeking outside aid to revive a banking sector laid low by a property boom that has long since bust. The risk premium demanded by investors to hold the Spanish 10-year debt rather than the German benchmark reached its highest since the launch of the euro, and closed the day for the first time above 500 basis points at 511. Now this is actually one of the things that were seen as the likely scenario, the spreading of the crisis, and Spain has set this number 2 target after Greece. Meantime, the Greek banks received some aid. Top Greek banks handed actually 18 billion euros support from Greece to its biggest, four biggest banks. The Greek Finance Ministry said allowing the striking lenders to regain access to European Central Bank funding. The long-awaited injection via bonds from the European Financial Stability Facility Rescue Fund will boost and nearly depleted the capital base at National Bank, Alpha Bank, Eurobank, and Piraeus Bank. Another supportive tone now from Greece, coming with the single currency, seeing a potential of some recovery. However, the outlook still for the Eurozone remains quite cloudy and far from any workable solution at this point, but some positive action was seen this morning on Euro and the sterling, especially the British currency that regained again 157 level. This was one of initial barriers required to confirm the near-term base and allow for stronger recovery. This was reported in our morning technical analysis written report that was distributed earlier this morning. Sterling, pardon, gold is again in a positive mode after a slight easing from yesterday's high at 1583, still keeping a positive tone of recent lows at 1526 and 1533, with the focus still at 1600, our initial barrier, as well as crude oil again bouncing higher from yesterday's low at 90.85, as concerns about possible failure of complete failure of the current negotiations between Iran and the UN watchdog are boosting the oil price for now. However, the negative tone that dominates on the oil in past couple of months is still keeping the downside favored, as a number of data released from the major world economies still showing that most of the economies are struggling and far away of any stronger recovery for now, as PMIs in most of the countries, especially in the Eurozone and China, are holding below critical 50 levels, the level that divides contraction from the recovery. A brief look at today's calendar. Not a big calendar for today. Import prices from Germany for April dipped further than expected. Minus 0.2% was forecast, and the release was minus 0.5%, with Germany preliminary CPI due to be released during the day. Minus 0.1 is the forecast for today. From UK at 10 o'clock GMT, CBI realized sales for May, a slight decrease from previous negative release at minus 6, seen at minus 7 today. And finally, from US composite 20 home price index on yearly basis for March is forecasted for slight improvement from the very negative release of previous month at minus 3.5%. Minus 2.7% is the today's forecast. And the consumer confidence for May from US at 1400 GMT is forecasted at 70 compared to 69.2 of the previous month release. And we're going to take a look now at the major currencies and commodities and see the latest movements. As shown on the hourly chart, single currency is attempting to base at 125. That so far offered good support and prevented the pair from the further decline after a strong descent of 132.82 1st of May low, reached level briefly below 125. 124.96 was the low seen last Friday. That might put risk of further extension lower and possible test of 120 and 118.75 levels, as negative news and negative fundamentals from Eurozone continue to pressure the single currency. However, on the hourly chart, some recovery, some points of possible stronger recovery are seen, as the pair is currently forming the bottom diamond formation seen on the hourly chart, with break above our initial barrier at 126, 126.23. It's a previous high and approximately 38.2% retracement of the latest down leg from 128.23 to 124.96, seeing potential to confirm actually the completion of the pattern and to allow stronger corrective action. However, this is still quite weak and shaky, and basically a regain of more significant barriers at 128 zone, where is the previous high of 21st of May at 128.23, as well as 128.00 zone, 38.2% retracement of the larger down move from 132.82 to 124.96 is required to confirm base at 125.00 and open way for a stronger recovery with the 129 and the 129.50 zone seen as the next target on the potential break higher. For now, we need to see the clearance of initial barriers at 126, 126.20, where is also descending bear trend line of 132.82, currently standing at 126.07, in order to confirm the near-term recovery phase and open next levels as at 126.60, 127.00 coming as the next one, where is also 61.8% retracement. On the downside, loss of 125, as said, risks further weakness and possible extension in the short to medium term towards 120 zone, as overall picture remains firmly bearish. However, overextended studies on daily chart see potential as the stochastics are reversing higher, and might give possible a signal of stronger recovery. As said, most of the studies are there extreme downside levels. That could be good signal for some stronger recovery action of the single currency. The pound, after finding ground at 156.54 yesterday, is just ahead of a strong support at 156.40, 61.8% retracement of the 2012 rally from 152.33 to 163.00 yearly low to yearly high, where the temporary support was found, is now bouncing higher again as yesterday's dip was contained at 156.54 and currently attempting at 157 zone, 157.15 seen so far. This is also the previous high, yesterday's high. We need to see the break above minimum above this level. That also marks 38.2% retracement of down move from 158.47 to 156.29 in order to avert immediate downside risk and trigger some stronger recovery. 157.38 and 64 are the next Fibonacci levels seen on a clear break above 157.15, 50 and 61.8% retracement ahead of a more significant barrier at 158.40 zone. 158 marks the 200 days moving average on the daily chart, and 158.47 is the high of 22nd of May, and basically clearance of this level would confirm the short-term base at 156.30 and allow for a stronger recovery of the larger downtrend of 163.00 that so far found a footstep at 61.8% retracement of the entire move at 156.40 zone. Dollar yen still holds a slightly positive tone of 79.00, recent low posted on 18th of May, where the pair is currently attempting to base. However, as upside recovery action was limited at 80 area. 80.13 was the high seen so far, just near 38.2% retracement, with the currently narrowing range and rather neutral studies seen on the lower time frames might be signal of further range, as currently the price is entrenched between 79.20 and 79.80 range, and the break of either side to signal fresh direction. However, on the upside, the regain of minimum 80.00 is required to confirm and open next very significant barrier at 80.60, 80.70. That marks previous highs of 2nd, 3rd, and 16th of May, as well as 61.8% retracement of the broader down move from 81.77 down to 79.00. As long as the later 79.00 holds the downside, there is a possibility of stronger recovery, with levels to be cleared at 80.00 and 80.60 required to confirm and allow stronger corrective action of the broader downtrend from a yearly peak at 84.17 of 15th of March 2012, as the recent bearish action from 84.17 so far found ground at 79.00, just below 61.8% retracement of rally from 76.00 1st of February yearly low to 84.17 15th of March yearly high. Failure to regain 80.00 would keep risk still at the downside, and the 79.00 support vulnerable, loss of which open next significant level 78.59 currently is 200 days moving average, and that will signal extension of the broader downtrend of dollar yen, while a break above 80.60, 80.70 would be signal for some stronger recovery action and prevent further weakness in favor of stronger corrective action. 81.00 would be the next target in case of break higher. And the dollar Swiss still in the strong bullish action. However, 96 zone now proves to be quite tough resistance, as the second, basically the third attempt higher again failed to clear. This level 96.05 was seen during the overnight session, where the pair failed to break higher, and subsequent easing seen so far as consolidative corrective action, as the larger picture still remains firmly bullish. However, overextended and overbought conditions now are signaling a possible deeper corrective action ahead. Immediate risk is seen on formation of double top pattern with the initial support at 95.27, 95.00 zone, a break of which to allow for a deeper reversal. Key support on the short term lies at 93.66 is the higher low of 21st of May, and break of this level basically would be confirmation of the near-term double top pattern, and would allow, as this is a bearish pattern, it would allow for a stronger reversal. Interim supports below 95.00 come at 94.75, 23.6% retracement, and 94.65 higher low of 23rd of May, break of which would be a signal for a possible revisit of 94.00 and then 93.66 as the key support on the short term. On the upside, clear break above a 96 zone would open way for a 96, 98, where is 150 days moving average on the weekly chart currently standing. As said, overextended conditions on the daily chart see increased risk of deeper reversal of the dollar Swiss. The yellow metal still holds the short-term positive tone of 15.26 and 15.33 higher low, as series of higher lows keep the upside favored for now. After yesterday's yesterday's easing found support at 15.71 overnight, where the 55 days moving average kept the downside protected for now. We need to see the break above 1583, that's yesterday's high, in order to refocus upside. The levels 1590 and 1600 as our key upside barrier that marks also 50% retracement of down move from 1671 to 1526, and a break above this level, and 61.8% retracement at 1616 to confirm. Still on the 4-hour chart, studies are emerging out of the negative territory that could give good support for the yellow metal, while daily studies are still in the negative territory and still see increased risk of revisiting critical support at 1530 20 zone, as long as 1600 as our initial and the key barrier stays intact. The crude oil enters short-term corrective action of 89.28, low of last week. Last time seen in October, levels last time seen in October 2011, and found support was found just ahead of next significant level at 88.54 that marks 61.8% retracement of the longer-term rally from October 2011 low at 74.94 that peaked at 110.53 high of 2012, posted on 26th of February. Current recovery action is keeping the upside in focus, as yesterday's action reached 91 and 97, and a brief correction was contained at 90.85. So far, with the fresh strength seen this morning, seeing potential for a stronger corrective action. However, this is still seen corrective as long as I would say minimum 94.63 previous, 95.43 pardon, the previous low of 2nd of February, and the 96.72 200 days moving average stays intact. Break above these levels and possible regain of $100 per barrel would be bullish again for the crude oil, as it was recently pressured by fears of lower demand and the crisis with Iran that has so far hasn't given any results of the current negotiations between the Iranian government and the UN nuclear watchdog that are trying to limit Iranians suspect that Iran is producing the nuclear weapon and trying to limit current production, with some failures seen in yesterday's and the last week's meetings, now opening all cards, keeping all cards on the table for possible further negotiations that might continue in June. Meantime, strong fears of lower demand for energies due to the deepening crisis in Europe keep pressure on the energies. However, deepening crisis with Iran might signal a further disruption in oil supply and be good support for a further strength of the oil prices. Top oil producer Saudi Arabia, as mentioned yesterday, said that ideal price for them should be around $100 per barrel. That was all for today. I would like to thank you all for attending our live sessions. All those that connected later might view the whole session in the YouTube on the Windsor Brokers Forex page, where you will find another interesting comments and analysis. We're back tomorrow morning at the same time at 7:00 with fresh updates. Until then, I wish you a nice day and very successful trading. Good luck.